Welcome to Talk Tickers. Today, we're breaking down the Q3 earnings call for Delek US Holdings, ticker DHK. And wow, did the market react? The stock absolutely soared on earnings day, a jump of over 5.5%. So, what exactly fueled all that optimism? Okay, let's dive into the call and find out. Right off the bat, you can see Delek just delivered a monster quarter. They beat on revenue, sure, but the real story, the headline, is that adjusted EPS. Analysts were looking for around 28 cents. Delek came in at $7.13. That's not a beat. That's an absolute blowout. So where did all that profit come from? Well, the strength was pretty broad-based, but you can see the refining segment was just a powerhouse. It pulled in almost $700 million in adjusted EBITDA. Just an incredible performance there. Now, this performance wasn't just some lucky break or, favorable market wins. It was really driven by management's own strategic playbook, specifically something they call their Enterprise Optimization Plan, or EOP. The CEO couldn't be clearer about how crucial this is. And that playbook really comes down to three key things. First, cranking out cash flow from that EOP we just mentioned. Second, cashing in on something called Small Refinery Exemptions. And third, continuing the economic separation of their logistics arm, DKL. Okay, so let's zero in on those Small Refinery Exemptions, or SREs. What are they? Well, in short, they're these EPA grants that let certain refineries off the hook for some expensive blending requirements. For Delek, this is a really big deal. It's a major cash catalyst just waiting to happen. And just how big of a catalyst are we talking about? Well, management expects to turn these grants into cold, hard cash to the tune of about $400 million. And they expect that money to hit the books over just the next 6 to 9 months. That's a huge cash injection. And on top of that SRE money, management is also signaling a ton of confidence in their own internal game plan. They've actually raised their annual cash flow target for that EOP program. They're now guiding to at least $180 million, up from the old range. You love to see that. So, when you put it all together, you've got this massive earnings beat, you've got clear catalysts right around the corner. What's the play? How should you be thinking about this for the next quarter? Let's move to our take. For our next call, we're initiating a rating of outperform and slapping a $50 price target on it. To us, this is a really compelling self-help story. Between that SRE cash coming in and their stellar execution on the EOP, we see a really clear path for this stock to continue to re-rate higher. Okay, now for the fun part. Let's imagine we're pitching this to a hedge fund's investment committee. Here's our outrageous but plausible trade idea. The play here is a classic pairs trade. You go long Delek because you believe in their company's specific story, but at the same time, you short one of their peers, one that doesn't have all these awesome catalysts. The whole point is to isolate the outperformance from Delek's execution and cash flow, while basically hedging out all the noise from the broader energy market. And as always, this is not financial advice.